This is our Forex blog for November 1st, 2012, and the first step of our three-step Forex trading system is using our currency meter. This is a new one. The old one looks similar to this, but underneath the real-time trend strength we had the 15-minute trend, hourly trend, daily trend, weekly trend, and monthly trend. And sometimes different time frame trends are going in different directions, and it caused traders to focus on the wrong currencies or they didn't know which direction to trade with. This one uses about 4% weight for the monthly trend, 13% for weekly, 18% for daily, and 2/3 of it is very fast real-time trend direction and statistical intensity. And so basically you want to look at this and trade the currencies that are weakest against the strongest and vice versa. So let's scroll this back to midnight here. We can see the pound very, very strong, the yen very, very weak, and one of the highest odds trade would be to buy the pound yen or New Zealand yen. It's that simple. And so that's the first step of our easy three-step system. By incorporating the daily, weekly, and monthly trends, we can see the difference between up moves and down moves in intensity. Extreme weakness, less strength, weakness comes back, less strength, weakness comes back, no strength whatsoever. It's a no-brainer right here to be looking for sells. And as you scroll forward, look what happened. It continues down for many, many hours. And the New Zealand continues up for many, many hours. So the key to trading is small losses, big wins. And when you trade in this fashion, not only do you tend to have very decent winning percentage, but your wins tend to be 2 times, 3 times, sometimes 5 times bigger than your losses. And that's what allows traders on bad days to not lose much, break even, or make money, even though they might be under 50% on the day. On good days where it's clear, like it is today, and the trends just keep continuing, you can have huge wins. So let's take a look at the pound yen and New Zealand yen. So as you look at this today, you can clearly see, the intensity of up moves is more than down moves, up moves more than down moves, and vice versa, pretty much throughout the day until about right here, and then it continues again. And then for the most part, the market's kind of chopping around after the U.S. session's mostly over. But you can see, this one right here goes up a few pips, this one right here goes up 40 pips, this one here goes up 10 pips. This is a counter trend signal because it's a circle, and you would have had a loss there, and another tiny loss, a win here and here, a win here, a win here, this breakout here, this counter trend move up, this one up, this one up. Pretty much the majority of the trades worked. And a lot of traders don't realize this, but if you just net 10 pips per day, here's our trade analyzer planner, which I show every month or two. For people that watch these religiously every day, they've seen this before. But if you have a $2,000 account and you just get 10 pips per day, your $2,000 account every 2 months pretty much doubles. Another 8 weeks out, you can see 38,000. Another 8 weeks out, 82,000, and so forth. And as you can see, the trade size gets bigger and bigger, and it's using the power of compounding. But the point is, 10 pips per day does very well. You got in right here and you got 40 pips, or you got in right here and you got out with 15 pips, you hit your daily profit here. If you got in here and lost 8 pips, another 8, got in here and made 25, you're up 9 pips on the day. You're only, even though you're 1 out of 3, if you took all 3 of those, you made money. And so that's it in a nutshell. Let's take a look at some of the other currencies. As you can clearly see, the New Zealand was also very strong, and it also continued past 8, even though the pound did not. The pound yen still went up after most pullbacks after 8, just because the yen was much weaker than the slightly less weak pound. But it was clear after 8 the New Zealand yen was the one to be buying. Now this one today was so strong that we really didn't have any pullbacks, and so one of our trade signals that shows up on the chart looks for a certain number of bar pullback, and we never really had it here. But if you have a currency that's this strong, and the New Zealand was strong, the yen was weak, when it breaks out over the high, that's a pretty decent entry. Or really the only other entry I would have personally taken is a up down up 3-bar pattern right here. pretty much low volatility, just broke above a monthly pivot level, and this without a doubt was one of the strongest ones. When you do get a breakout like that and the market's up at or above our upper 2.0 white band, typically it's not going to continue that much farther, so draw your fibs and get into this trade somewhere underneath 66.10, and you're going to be out 66.20 or at the latest the 1.618 fib target. Again, above the upper 2.0 band, statistically the market's gone too far and it's much more likely to reverse and continue, and you can see it just pretty much went sideways up there. You know, every once in a while you're going to have a currency that's so strong that there's no pullbacks. And there's really only two entry methods that we have. One is a sideways rectangle pattern, and the other one is a pullback pattern. So after showing those two charts, let me just bring up the euro dollar, pound dollar, some currencies that people like to trade each day. As you can see, our FX trade signals does a pretty good job. Found the low right here. These two trades here failed. Found the high here. This was found the high of the day here. About this pullback you made a little bit. The key is to use these signals. This is a major support here, and that's why I gave a buy signal here. The down move before had a lot more weakness than the second down move right here. You can see it had a lot less weakness. You always want to draw trend lines on the charts, get a feel for, you know, where the breakouts would be if you have a down move like that. And sometimes a bar or two pops above it. When it breaks out, and I would have actually used it right here, when it breaks out right here, it's a pretty high probability it's going to go back to the previous day's low or the hourly moving average. Near the upper bands, if you get, you know, I'm going to put in experimental trades like this that will have a different color than the red or green or gray for the low odds counter trend trades. These are relatively high probability trades that are experimental. I put this new signal on there today. It's basically above one of our containment bands that does not show up on this chart. It's above the 4-hour statistical high. It's also at or above the 1-hour statistical high, and it's a relatively high probability trade. Some trades you'll see as well, when a currency is going up, it pulls back, it comes back up, and it can't take this high out. It's very hard to teach a computer to spot a double top like that, but a human being can very easily do so. And you can see it was going up, one wave, a tiny wave, 3 waves up. It's going sideways here, can't take that high out. And so when it comes back down underneath this low, it's a very high probability short, and you can see it fell 20, 30 pips. Here's the pound dollar. If people just want to just simply bring up and trade some of the more common and popular pairs like the euro dollar, pound dollar, euro yen, pound yen, you can do that. You can see here this one failed. This trade here led to 30 pip win. This is giving you a heads up that it's a pretty high probability that this trend has ran out of steam, and it has. I wouldn't necessarily sell a low odds gray counter trend signal. But I want to put them on the chart just so that if you are long, you can tighten your stop and get out of the trade. Or if you see the upwards momentum kind of run out of steam, as you can clearly do right here, take a short and ride it back down and get out. Small 10, 15 pip counter trend profit that you were alerted to relatively early before it happened. You know, again, this is a little mini double top right here. Pullback trade here goes up 30 pips. Another counter trend signal. This is a much higher probability one, so I don't mark it gray. The lower probability ones, I'm giving you the option of coloring these however you want. Uptrend and downtrend color. Breakout trades are yellow, and then the low odds counter trend signals are gray. If there's any counter trend signal that is a higher probability, it's going to be dark. Or it's the same color as your red or green buy signals. And you can see a breakout trade right here because it went sideways for a while and broke out, and this one failed. A lot of these yellow breakout trades do lead to decent profits. Oops. Here is the euro yen. And you can see this little pullback trade right here. It did go up a little bit, kind of went sideways. You would have a small loss. Counter trend trade here that worked. Trend trades here that worked. This one here failed. You would have had a small loss. Win here. This breakout trade here worked. Notice the 3 sell signals right at a major resistance area right there. All of them worked. Counter trend trade here worked. This one, continued up another 5 pips. This trade here worked. This one failed. Small profit, small profit. But for the most part, you can just bring up the commonly traded currencies and just trade them based on the buy and sell signals. And if you see a pullback right here where there's not that much weakness, you take the trade. But as it goes up, down, up, and you don't see much strength coming back, you can get out of these trades with 2, 3, 4, 5 pip wins sometimes, or 3 pip losses. And when trend trades fail, typically if you, and the computer doesn't, and it's very hard to teach a computer to do this, but if you have a pullback trade like this that fails, and maybe you made 3 or 4 pips or lost 4 or 5 pips, when it breaks down underneath that little sideways rectangle, you can flip it and go the other way, and you can see you write it down. It was very weak. This is alerting you to possibly get out. You get out of your trade here, take that trade here, you make money. Let's bring up the pound yen. Now, I already showed this one earlier today, but you can see small win here, nice win, alerted you to a possible uptrend that was over, and it did pull back. Notice the double top right here. This last move up right here, it started to have less and less strength. Ran out of steam there, boom, pull back. And a lot of times you can spot a reversal. Let's scroll through this bar by bar. I'm using the right arrow key. Less strength. Notice how we made a higher high on the bar, but there's less momentum on our statistical trend tool. That means other pound pairs are losing momentum up, other yen pairs are losing or getting stronger. A lot of times wicks above the previous bar's high, and then the bar closes down as a reversal pattern. Now, I wouldn't take a trade like this, with the exception that it's right at the double top. I would prefer it to be right near the 2.0 white band, which is a much higher probability reversal area. Most of the time, price does not stay above the white bands, pulls back. Goes above it, pulls back. You can see within a pip there, pulls back. If you do take a counter trend trade like that, watch the momentum, and you want to see the strength lessening and lessening, and it's eventually going to turn red if the trend continues. See lessening, goes red. All right, now this is a bar here that has a little bit less weakness than the previous one, and because the trend's up, you might want to get out of this trade with a few pips of profit, or at least move your stop to break even. And you got some counter trend reversals, trend trades here. But it is still red if you want to move your stop down above those bars high. Look, the weakness picked up, and now it cut back. You have another trend buy signal here. You probably want to get out on the next bar. And as you can see, it's going back up. And the whole principle applies that if you want to get out of a counter trend trade and you see a buy signal for a trend trade, it's a higher probability entry. And if you got into that trade here when it went 1 pip above this bar's high, at 11 here you can see it went up 24 pips.